How do alternative investments affect Black retirement taxes? Have you ever wondered how alternative investments can play a role in retirement planning, especially for African American investors? Let's break this down in a straightforward way. Alternative investments include assets like real estate, private equity, and precious metals. These can be held in tax-advantaged retirement accounts such as self-directed individual retirement accounts, Roth Individual Retirement Accounts, and 401(k) plans. By diversifying beyond traditional stocks and bonds, these investments can potentially boost growth and provide better asset protection for retirement portfolios. For African American investors, using alternative investments in tax-advantaged accounts can impact retirement taxes in several important ways. First, when you hold alternative investments in accounts like traditional individual retirement accounts or 401(k) plans, the income and gains from these assets are not taxed each year. Instead, taxes are deferred until you make withdrawals in retirement. In the case of Roth Individual Retirement Accounts, qualified withdrawals can be tax-free. This tax treatment can help your investments grow more effectively over time. Next, alternative investments often have different risk and return profiles compared to traditional assets. For African Americans, who may face challenges in accumulating retirement wealth, diversifying with these assets can help improve portfolio growth and reduce volatility. This can indirectly affect the amount of taxable income you have when you start taking distributions in retirement. However, managing alternative investments can be more complex. They may come with additional tax reporting requirements, especially when it comes to real estate. For example, real estate investments can generate unrelated business taxable income within tax-advantaged accounts, which could lead to unexpected tax liabilities. It is essential to understand these rules to avoid surprises. Access to financial education and resources can also be a barrier for many African American investors. Lower participation rates in employer-sponsored retirement plans and limited financial literacy can make it harder to utilize alternative investments effectively. Increasing knowledge about these tax-advantaged options can empower African American investors to reduce their taxable income and grow their retirement savings. Practically speaking, using self-directed individual retirement accounts or Roth individual retirement accounts to invest in real estate or private equity can be a smart move. This allows investors to build wealth in assets they are familiar with while enjoying tax advantages. For instance, rental income or gains from real estate held in a tax-advantaged account are not taxed annually, which can improve overall returns and readiness for retirement. In summary, alternative investments within tax-advantaged retirement accounts can offer African American investors opportunities to grow their retirement savings more efficiently. However, these benefits requiring careful management and an understanding of tax rules. By effectively incorporating alternative investments into retirement strategies, it is possible to address some disparities in retirement wealth and taxes.